It was one step forward and one step back for retail subsectors in the third quarter of 2016. If you take a look at regional malls, it did show some improvement, with vacancies declining by 10 basis points to 7.8%. Relatively strong asking rent growth at 0.5%, but really nothing to call mom home about. It's between 0.3 to 0.5% on a quarterly basis for average asking rent growth for regional malls, at least for the last 3 to 4 years. At least it's positive, and we are seeing some activity over there. If you take a look at neighborhood and community shopping centers, on the other hand, we actually had a bit of a reversal, with vacancies rising by 10 basis points to end the third quarter of 2016 at 10%. Asking and effective rents both grew by a paltry 0.4% at a year when we were expecting, hoping probably, for a little bit more of an acceleration in rent growth, at least for the beleaguered sector that is retail. What's happening right now is that though households and consumers appear to be healthy, robust, and spending, we are seeing a lot of businesses actually pull back on capital spending and longer-term investments, ostensibly because they're waiting for the results of the November 8 election before committing to longer-term commitments. And that seems to be hurting at least a lot of construction projects on both the office, retail, and even on the multifamily side. On retail, it's wait and see. It's almost a hold pattern for retail at this point in its development. We aren't seeing a whole lot of building, and we'll see where the dust settles after the election is done, and once 2016 is over, as to where 2017 will lead the retail sector.